Hello and welcome back. Hope you're good, doing well. So we are having dollar yen. We were expecting dollar yen to hold the previous top and then give us a drop from there. And price is just simply reaching back to the previous top. All right. So the setup which I'm talking about is this one. All right. So after the Bank of Japan has tweaked the yield curve control, so after that, we can see clearly in that video analysis, we were expecting dollar yen to tag that top and then give us a price action over there and then drop. So we clearly can see that the strength, as explained in the previous video analysis, is still pretty strong over there and clearly has broken above that top. All right. So first of all, let's look at that. What has caused that aggressive strength to happen? Okay, so we need to understand that why dollar has gained aggressively back to that top. Okay, so for that, I'm gonna look at the news. All right, so I think that's not the right place. So news broke out almost 7 or 8 hours ago that the Bank of Japan they have bought unscheduled bonds worth $2 billion, which has caused that that move to happen. So yeah, that was expected, right? As we know that the Bank of Japan, they have tweaked the yield curve and the yield went aggressively higher across the 60, and that's the reason they came in and then they bought. So Bank of Japan announces special open market operations 6 hours ago, yeah, to buy 300 billion yen, $2 billion worth of Japanese government bonds. First such purchase since February 2022 as long-term yields. Right, that makes sense when we look at the yield. All right, so when we look at the yield, so there is the yield. Okay, so yield, that's what they're going to do. All right, they won't let that yield to just spike up to 1%, in a one go. So we clearly can see that the yield spiked up and they bought a unscheduled bond over there worth of $2 billion. So that's how they're going to let the yield keep pushing more higher up to 1%. All right. So the term they used, flexibility. All right. So obviously that bond buying operations going to slow down over time. So that has happened, all right? So, and just recently another news broke out, okay? So if I'm gonna look at this again, so there we can see that again. So as explained in the previous video analysis, that the Japan Ministry of Finance, all right, and Japan both were going opposite. So Big Bank of Japan, was focusing on the yield curve, while the Ministry of Finance is focused on weaker yen. Japan's currency intervention amounted to 0 yen from June 29th to July 27th. All right, so we're gonna keep hearing these kind of comments from Ministry of Finance if yen will keep losing its value. All right, so what is the setup? Okay, the setup is simply that the dollar, yeah. So again, and as I have explained in the previous video analysis, that we still may see this move. Okay, price can still visit 145, where we have seen intervention from the Ministry of Finance, all right, within these areas. So we have seen verbal intervention from there and a nice leg lower, and there we have seen a policy change tweaked. All right, so market was confused, news broke out, market was confused, all right, and market is now realizing that how that tweak gonna work. We still can see some strength over there, dollar on dollar yen to all the way up to that top. But right now we are not looking that move. All right, we are having another rate decision this week. So Bank of England is going to announce a rate decision. What we are looking simply, so we are looking this to fall. All right, fall back within this bigger sideways market. All right, like that, or just simply fall and continue to keep dragging lower. So there we may see a short-term trade as well, as explained in the previous video analysis. Okay, you're watching price action very, very closely over there. Okay, and the price to just start falling. So first of all, you're looking for short-term trade, at least 1-to-1 risk-reward ratio, and if the sell-off is going to come very, very aggressively, then extending your target, all right, somewhere 1 to 2 or all the way back to that low, this area, all right, different targets. Or for longer term, sell off all the way up to 120, or first 127, all right, and longer term 120. 120 is still far away, all right, but these areas, these places. Now let's look at the trade. Okay, so what kind of trade you are looking? So if I'm gonna open that, so we have seen similar. This is the pound dollar chart, all right. So we have seen a similar sell off. All right, so I have just inverted that chart, the pound dollar. So we have a similar structure, all right. So we simply gotta sell off from there. There's a cross line required there. Okay, so I'm gonna put it over there. So we gotta sell off from there on the dollar yen, all right. At the same time, we got a strength on the pound. Right, so pound got stronger, yen got stronger, and then we gotta, sell off on the pound, or dollar started to gain because of, dollar was pricing in for the Fed rate, the CM, and we gotta sell off, on dollar, and we got that correction. So similarly, we gotta sell off on dollar, we got that correction. So that correction broke out after the ECB rate decision, Fed and ECB rate decision. ECB was slightly dovish, which caused that weaknesses on the euro and strength on the dollar. So we got that next leg lower, and pound broke below that top, right, bottom. So similarly, after bond buyings and all those measures which Bank of Japan has just taken, dollar has just broke out that top and struggling, over there. So similarly, we have seen breakout of that top, and pound just recovered after breaking the bottom and recovered aggressively lower. So basically you are looking this kind of trade, all right, so this kind of move on the dollar yen. So yeah, so price to just start falling very, very aggressively and start correcting over there, very much similar like the pound is doing right now. Okay, and we are expecting pound to break down. If you haven't seen my previous pound dollar analysis, just go and look at that. You're gonna get the idea what move we are looking at the pound dollar. Okay, so this is the move you are expecting on the pound dollar to give you at least 1-to-1 risk-reward ratio. And if we're gonna see strength on the pound after the Bank of England rate the CM, obviously we are looking more downside. So basically this is the move you are expecting over there from a dollar yen to give you. All right, if I'm gonna open, if I'm gonna look at the lower time frame, and similarly on a pound dollar chart. All right, so similar move we have experienced on both charts. All right, this move and that, and then a flag, you can say that, and then broke out, then another flag is just appearing over there. So similarly, price may stay over there for a couple of hours again, then you are looking at to break down, aggressive sell-off like this, okay, and then go into a correction, and then will break out. All right, so if I'm gonna pull out the pound dollar chart, all right, so that you can get the idea that what kind of move you are looking on the dollar yen. So if I'm gonna, there you go. So we're expecting pound dollar to continue its bullish trend for upside. So we're having a huge divergence. All right, so now we can see that the policy is converging, means that the Bank of England and Bank of Japan is also following the other banks, all right, and normalizing its policy. So this bounce off we have seen, okay, after the sell off, ECB sell off. So this bounce off, I'm trying to tell you that this bounce off or the sell off you are looking on the dollar yen. Okay, so this move. So we are having a huge divergence, all right? So now we can see that the policy is converging. Policy convergence means that the Bank of Japan is also started to follow the other banks. So policy change, so tweaked, all right? So both were falling, all right? Our dollar was rising, and pound recovered, went higher, right? And dollar yen is still close to that top or low, all right? And we are looking dollar yen to gain at least up to this area, right, up to 128.7 in longer term. So hope that makes sense. All right, so thank you, and we'll see you in another setup. And right now you are looking this to hold. Do not keep pushing more higher and just simply fall this trend, okay, this trend to aggressively fall down. So once it breaks down, then you are interested into that sell. Once fall down, you are interested and looking for this to continue to keep dragging lower. Thank you.